I'm currently up 2.3 bands in this John Pork trade, and I'm gonna give y'all one of the techniques that me and my homies use to not get drained and to manage risk, right? So this applies to any coin, so I'm not gonna go over the specific narrative of this coin, but essentially let's go through it. So I bought this coin like a month ago. I think it bonded around there. I bought it was kind of rushing up and I was kind of late to the party, so I bought around 200, 300K, and then it started dipping crazy. And so I got some a little bit more size in down at 8 80K, 70K. So that's these buys right here, right? And the tip that we're going to be talking about is called playing with house money. Me and my niggas call it taking initials. It goes by different terms, but it's basically whatever you put into a coin, after a few X's, you should be taking it out, right? Being disciplined, not mirroring your bags. A lot of y'all will ride a 25X and just ride it all the way back down to zero and lose on it. That's ridiculous. For me, my rules, really, I'm looking for a 3 to 5X around there. But if it's a very risky play or if I'm sizing into it, I might go with a 2X, right? Let me explain it like this, though. So let's say you buy $5 worth of a coin, and it applies to stocks too, I'm pretty sure. Let's say you will buy $5 worth of a coin, right? And you buy at 20K market cap, right? And it 2X's to 40K market cap, and you sell $5 of the coin. You now have $5 in the coin for free. That is the house's money. It's other people's money, other traders' money that you get to basically play more risky on. I'd say play more risky on that money, even though money is fungible. Play more risky on that money instead of the money your initial investment, right? You already took out your initial investment of $5. So now you basically got straight profit to take more risk on, right? And that's the same principle I'm using in this John Pork trade, right? So let's use money since people don't know about Sol like that. So I put $2,100 into this coin, right? On the DCA down, And then I pulled out up here once at approximately a 3X from my fill because I got filled, my average fill down to 120K. And my average exit is 336K. So at approximately like a 3X, 2 to 3X, uh, in that range, I took out my money, meaning I get to keep a large percent of my investment. And this is basically the house's money at this point. So now I'm able to go to sleep, and just if the coin cooks, it cooks. If it doesn't cook, it is what it is. You know what I mean? But I've managed my risk. Right. Even if I love a coin, I will not marry my bags. I'm still taking initials. You should have a target for initials. A lot of y'all will write a 20X, a 10X, and it don't make sense. Y'all will write it all the way to zero. Take some profit, cover your initial investment at least, maybe take some profit on top of it. That's just disciplined trading. That's how you manage risk appropriately, especially if you're sizing into plays. If I'm sizing into a play, I'm going with the lower range of like 2 to 3X. A lot of y'all think it fucks up your P&L, but this is the math on initials, right? So this column is the X's. So this is a 1.5X, a 2X, a 3X, 4X, a 5X, right? This is the X basically represented as a percent, right? So this is the amount, the percentage of supply, your initial buy supply that you get to keep. And this is the difference between, I basically made a column for if you subtract this number versus this number, right? So let's say you took it out at a 3X instead of a 2X, you get to keep 16% more of your supply. I think that's how it works. I'm pretty sure. So if you're reading this correctly, add a 2X, you're up 100%. And if you take initials here or sell here, sell for your initial investment, you get to keep 50% of your supply. At a 3X, you're up 200%, you get to keep 66% of your supply. If you sell at a 4X, you're up 300% and you get to keep 75% of your supply. 5x, you're up a 400%, and you get to keep 80% of your supply, right? And if you notice, the differences between these numbers keep decreasing, right? So it doesn't make, imagine, I didn't even go all the way to 25x, but look at the difference between 19 and 20, right? It's not that much. So it's a noticeable decline after like 5. So really in this range, really I try to stick into this range, right? If I'm sizing into play, I might even go with a 2x. If I don't like a coin at all and I just want to take my initial investment, I'll go even lower than a 2x, right? You're gauging off a narrative, but there's a lot of factors that you gotta think about. It's narrative, your liquidity at the moment, uh PvP in the trenches. So I'm gonna be going over other things, but I'll try to isolate this video just to the concept of taking initials, playing with house money, right? Never marry your bags. I love, there's some coins I'm holding forever, right? But even if they hit my target initials, I'm going to sell, right? Don't just try to hold for 1,000x. Like that's not disciplined trading. That's why a lot of you niggas get drained and lose it all. My niggas don't do that. Trade, learn good trading fundamentals. And also, I don't hold coins usually on my main wallet. So this is a coin I'm going for like a longer term play. So I'm hoping it eventually starts cooking up. But I'm not really, I don't even pay attention once I take initials. Really, like if I know the coin's decent, like I just let it ride. I don't really pay attention to these coins once I have initials out. And I have what 2.2 in this coin for free. So I just go on and try to find the next cook at that point. So yeah. And if you like the video, like, comment, subscribe, and tune in for more tips. Try to make this short, but it is what it is.